I'm often approached by clients and journalists trying to explain the upside down world nature of markets, where we have Main Street very different and separated from Wall Street. And it's important as investors and traders that we help separate and try to explain what is going on. You can have major unrest, you can have major geopolitical issues, you can actually have even high inflation, and yet we still have markets going up in a positive trend. And one of the key reasons for that is liquidity. Liquidity for me is one of the key drivers of markets today. And I've watched this in a number of ways and case studies, dating back all the way to the GFC, the Euro crisis 2 years later, and even during COVID. We saw major turning points during these events, and you can pretty much correlate them to the times when central banks came and injected massive amounts of liquidity into the system to help backstop the economy. And for us investors and traders, one thing to watch out for is we look for major turning points in markets when these events happen by central banks. So what is liquidity? In its simplest form, think of a bathtub, and we're pouring money into the system or taking money out of the bathtub. And it's that movement of money either through the central banks and into commercial banks and how it moves out into the economy, into the investment world. And it's those flows that we watch for. And there are many barometers out there that gives us either a really crude barometer or really intrinsic and really detailed analysis of what these markets are doing. Some of the better ones and easier ones to follow is M2, the money supply in the system. Other ways to look at liquidity in the system is the real interest rate and the way interest rate cycles are either topping or reducing over periods. Some of the other areas that I also look at is the way excess reserves are being kept at commercial banks. And it's these barometers that I look at on a daily basis to give me some insight as to what is happening in this money flow. One recent example is a Silicon Valley Bank incident, where we saw the Fed Reserve come and backstop regional banks within the US. It was around the same time in late 2022, we saw markets basically find a bottom. Key crypto markets, including the Bitcoin market and technology stocks, also make a major pivot towards a positive turn. Just around this time, we saw liquidity and financial conditions starting to ease. Bitcoin markets and technology stocks are highly correlated to liquidity events. And as we've seen since then, both these sectors have been the best performing sectors really in the present day. So as a macro trader investor, one of the most important drivers of markets nowadays is liquidity, and trying to either preempt liquidity in the system or looking for major turning points in liquidity. Right now we're in around the mid-cycle of the key business cycle. And if we're going to estimate things, it could go all the way out to 2025 or in 2026, because liquidity is being pumped in the system. We are starting and commencing an interest rate cycle that started with the ECB only a couple of weeks ago. We're also looking at major commercial bank lending starting to increase. We're seeing loan demand increase. These are all great examples of liquidity coming into the system. As long as that's there, it gives us a strong tailwind to remain in the trade. So going forward, it's these drivers, liquidity, option market makers and structured products, and passive flows that have all coming together nowadays that are becoming the major determinants of financial markets. Obviously, we always look at valuations and the business cycle, but it's really important to remember that it's these other factors in the present day that are coming together to move markets on a daily basis. So, what I ask you to do is do some further study, look at these key barometers, and hopefully it will give you some understanding of what is really going on in this upside down world.